It's time for a spotlight here on REITs, the potential opportunity that you could have this in your portfolio. Ed Piersak's with us, economist, Senior VP of Research at REIT. Thank you for being here. So Ed, some of your thoughts on the group. Are any elements changing in your opinion?
Well, we are seeing a few things happening in the real estate markets in general. And one of them, we've had a very large divergence between public and private real estate. And the good news is that that gap has been closing, and we could measure that a few different ways, either rolling total four-quarter total returns or cap rates. But on the cap rate front, we could see that it really kind of hit out at a max of about 240 basis points, and it's about cut in half. And so what that tells us is that the markets are acting as we would expect, that they are ultimately going to converge, but that also indicates that there's really kind of more fuel in the tank for REIT outperformance in 2024.
Less concerned about a recession, I see, right? Where do you think rates are headed? Because that's a big part of the REIT story.
Yeah, so rates matter. They matter on a lot of fronts, certainly in terms of cost of debt. But also, we've been seeing a trend, basically, when the 10-year Treasury has been going up, we've seen REIT performance going down. And so right now, after the Fed chair gave his congressional testimonies, seems investors are putting about a 70% chance of a rate cut in September. I think this is great news for REITs, and I think that we've already seen some upside performance over the past week.
You talk about REITs just having, a less stressed sort of environment as an investment, that they have great flexibility. Could you give us some examples?
Yeah, so, a great way to take a look at this is we put out our NAREIT T-Tracker on a quarterly basis. And effectively, we're looking at operational performance as well as balance sheet metrics. And on the one side, we see that REIT operational performance, it's been solid. So whether you're looking at FFO growth, NOI growth on a year-over-year basis, or even occupancy rates, that's been strong. But then also, REITs have really been exercising a lot of discipline in their balance sheets. They've kept their leverage ratios low, but more importantly, they've also focused on long-term fixed rate and unsecured debt. So when you kind of add all that together, they really don't have a lot of exposure to the current turmoil that we've seen in the mortgage market. And then ultimately, they have a lot of flexibility.
So at this point now, when you think about some of the headwinds for REITs, you did the separating residential from commercial. I mean, we've had the get back to work versus work from home. That could be one of the headwinds you may be watching. Tell me some of the headwinds in your mind.
So, when I take a look at the overall environment, I think one of the biggest points we have to raise comes down to real estate fundamentals. So we're really talking about basic supply and demand. And when we take a look at the four traditional property types, what we end up seeing is that really demand has not kept pace with supply for really three of the four sectors. Retail was the only one where there's been a little bit of positive demand versus supply. Ultimately, we will see that will have an impact on operational performance going forward. But then as we take a look at just some of the other factors, obviously interest rates play a big role, particularly anyone who's facing a refinancing in the marketplace today. That will definitely be a headwind as well.
Yeah. Well, you think rates are coming down a bit. I mean, you mentioned a possible cut in September. So what do you recommend to investors? Are you looking at ETFs? Are you looking at REITs that focus on, is it medical buildings or certain properties?
So, we really can't give a investment recommendation, but what we can say is that even broadly, you could see that there is an opportunity in REITs. And in fact, we meet with a lot of institutional investors. And when I talk about this divergence or this spread in valuations or cap rates between public and private markets, we see that some have actually gone ahead and moved on some tactical opportunities. and which have really resulted in some large profits. Given that we still have a wide spread in cap rates today, our expectation is that there's really more there for REIT investors in 2024.
Yeah, I mean, what position in the portfolio, I mean, the allocation, how much should REITs be at this point? Should they up the position that they have, maybe tack on a bit?
So, we are always in favor of more REITs in a portfolio, but our perspective is, when you take a look at, particularly an institutional real estate portfolio, REITs can really be a tremendous complement to an existing private real estate allocation. And that's what we really kind of stress when we meet with investors. In addition to that, REITs offer really a wide menu of property types. Currently, REITs offer 13 sectors. You have difficulty getting access to those on the private side. So there are some strategic and tactical opportunities as well for investors to really kind of complete their portfolios.
Yeah, it's great to see you, Ed. Thank you so much, Ed Piersak. Thanks for being here and giving us a look at REITs.